Hey everyone, welcome to this TrendForce training. We just wrapped it up. This is part 2 of the golden setup. So Tony Robbins says anyone who can identify patterns in the marketplace will become wealthy. And so naturally, TrendForce puts out amazing signals for us to buy or sell whenever the market presents an opportunity, but not every signal is created equal. And so Dad went through amazing pattern recognition inside this training on how you can tell when we're in range, when price is stuck in a box, and how when price breaks out after that, we've got accumulation, manipulation, and distribution. And then when we get our signals, guys, when you break out of those zones like gold did last night on one of my trades, you are in the money. And so this is going to be an amazing session. You're going to save it. You're going to want to screenshot a lot of moments. Enjoy it, and we'll see you on the inside. Welcome everyone. So good to have you with us tonight for our Tuesday team training. This is week 2, or part 2, should I say, of our golden setup. So obviously, if you're on with us right now, you've probably been tracking along with us. But if you've just stumbled across this video in YouTube world, go back and watch last week, because this one's going to build upon that. We are covering tonight, again, another session of what the golden setups look like for us with TrendForce. Definitely bagged a few of those in the last few days. The pips have been flying in for me personally as gold has been tanking. So hopefully you've been making some pips wherever or whenever you've been trading. But in the meantime, guys, I don't take up any more time. I'm going to hand over to Dad in just a second, but we've got a full plan for the next few weeks all lined up. So I'm going to let him roll through that, but we've got a schedule in place. We know what we're covering. And so really excited to track along with each and every single one of you. So without further ado, Dad, I'm going to hand it over to you. Let's rock and roll.
Cool. Thanks, Ty. And welcome everyone. Thanks for joining us. Always appreciate everyone who takes the time to invest in training. The way we improve and become profitable is really through training and learning. So I thought I'd do a second part.
Can't see you, just in case you're hiding.
Oh!
I know. I don't think that was intentional. There we go. We got him.
Is my hair okay? There we go.
We're like matching on brand.
Sorry. Here I am. Well, anyway, thanks for joining us, as I was saying. And I do want to continue from last week, but I want to say thanks for the feedback. It really seems like since we've clicked into version 4, and that people are becoming more profitable. So it's really good to see. And thanks for the positive posts too. We really appreciate you posting your journey. I know we do make losses too, but it does seem we've never seen so many positive posts, more people getting wins, becoming profitable, increasing their accounts since version 4. So I'm really glad it's working. Obviously, it's a risk when we do make changes, but I think this one really needed to change. So tonight, well, I'll talk more about tonight in a minute, but the next 2 weeks, we've got lineup for training. Next week's going to be very important. We're going to look at the POC, but in much greater detail. All right, so there is an update for the POC. I was busy. I wasn't completely happy with it, and then Mark made a comment last week, already working with it. So thanks, Mark. And I've now been testing it. It's looking good. So there will be an update, but we are taking the POC to a whole new level next Tuesday evening. So it's going to be some really, really good training on the POC. So please don't miss that. Then also the week after that, we're going to look at counter trend signals, what to take, what to avoid, and looking for those high probability reversals. So that's the next 2 weeks all sorted. I'm sure there's going to be great value with that. But I want to talk about the big picture, that with trading, obviously with our indicator, any indicator people may be using, you can't just press buttons and expect to be profitable. All right? You can't just press buttons. And I've quoted Tony Robbins quite a few times. I mentioned last Christmas, my wife and I did this free course. We thought we'd do something different, grow ourselves so we could learn from another kind of speaker, another angle. And he mentioned something I've never forgotten. He said, if you can identify a pattern in the market, you will make money. And I make some daily declarations every day. And so out of that, I have a daily declaration. And it's simply this, that it's I see patterns that make me prosper. And so really patterns are so important in trading. I would say patterns are more important than signals. Anyone can see a signal. I could get one of my grandchildren who could spell to point out a buy or sell signal, but not everyone can identify a pattern. And it's ultimately patterns that are going to make us prosperous. So that's why we've emphasized, the golden setup. We're going to look more at that and a few other different patterns tonight. But it does take a while. I keep saying in trading, you don't know what you don't know. And eventually it becomes part of your subconscious. These patterns, what you see, becomes part of your subconscious. And I've said this a couple of times, but often when we've been doing our live analysis, a signal will come. I'll instantly say, I'm not touching that. I haven't even analyzed. They haven't gone through our rules, TAS, for trend zone angle in space. I just take one look at the current pattern and I know I'm not going to press buy and I'm not going to press sell. Like this morning, it was ranging. When I got on the charts at 5 o'clock, I went on the Dow. I logged in and then I looked at what was happening. And the first thing I did was I logged out. And then I logged into my demo account. I thought I'm not going to risk money in a ranging market. Because I could see the pattern already. It was ranging. It hadn't broken, the 15-minute candle range at all. Price was going sideways. And I didn't want to be tempted. I don't think I would have been, but I didn't want to be tempted because I took one look at the charts and I just saw range written all over it. I thought I'm not going to risk my capital. And so the big picture is looking at patterns. Before you press buy or before you press sell, you need to make sure that you can identify a pattern. And especially those golden setups. And I add one more little factor to the golden setup. Now, I want to apologize in advance. I'm going to be using the calendar option to go backwards and forwards. So there may be a little pause as I go to the spot, find the signal. But I looked for some good examples in the last week or so that would really emphasize what I'm teaching on tonight. Now, I want to encourage you. I regularly take screenshots and I put them on my desktop and I look at them because I want those patterns to get into my subconscious. And that's all idea, to be able to just be really an intuitive trader, be able to look at a screen and be able to make a decision. And so I'm going to ask Ty if I can just share my screen now. So there we go, share, and hopefully this is the one that I want. There we go, you should be able to see me. And whenever I share my screen, I've got to move your beautiful faces to somewhere else. Okay, there we go. All right, so we want to be able to identify different patterns in the market. And so we've talked about the golden setup. I think we understand, and here we've got an example of a golden setup. So we can see, I'm just going to look at the 1 minute Dow. I tend to trade that more than anything else. We can see here is a strong signal because it's bright. And I think we understand the reason why it's bright is because the MACD 3 times high is also trending. We can see this wonderful green band. I'll just blow it up a little bit here, showing that 3 times high is also trending. So that already fulfills rule number 1. But of course, what makes us a good trade, these are the patterns I was talking about last week, is we can see that all 6 trend zones on the main indicator and again in the MACD are all trending. We can see here, we're bullish with the 3 times higher. The 8 times high has just crossed over. We like that. We can see, what I also like about this trade is that we can see our price rejected the 8 times higher. There was compression. I'll talk about compression later. We like that too. And again, of course, you can see in the MACD, we have just the 8 crossed over there, 3 crossed over there. So we have 6 in a row. But now that is what we call a golden setup. But what lessens the risk of these kind of setups and also adds to the profitability is the relation of our signal and our zones to the 233. So I cannot emphasize how important this is that when you get signals and the trend zones, this is a form of compression close to the 233, those trades, and you can see this one, went right into space. So always be looking where you are on the 233, especially when the trade begins to play out. Now, this is not an example. We haven't got a buy signal here, but you can see if we had a buy signal, for example, over here, can you see how far we moved away from the 233? It doesn't mean don't take it. We look at the other factors of pullbacks. But when you get this initial signal and you're close to the 233, I tell you, those trades tend to move. So golden setups, yes, we want all 6 trend zones aligned, but we also want to look where we are with the 233. Let's look at a sell. So Thursday, 23 October, let's look at a sell. Thursday, 23 October, we want to go to 10 o'clock at night or so. Let's go down to 10 and let's look at what is happening there at an example of a sell. Now remember, if I was learning this strategy and learning TrendForce, I would be photographing things like this and putting them on my desktop. And then I've got free time, just have a glance. Because there's something about your subconscious. When you see a pattern once and it's in your subconscious, it's easy to identify again. So again, we can see we've got a golden setup here. That's why the signal is bright. Not only are we, obviously the current zone wouldn't produce a signal unless the MACD and the main indicator had crossed over. But we see again 3 times higher, the MACD has crossed over. Now remember, we don't get signals anymore unless we for cells below the 8 and the 3, that makes them high probability signals. And again, look how close you are. Even if we were closer over there, that would have been, safe to take. But whenever we can keep in view the 233, that makes a good signal. And those tend to drop. Now, this one, there was a bit of a pullback. That may have opened somewhere there, but still before the pullback, there was, let's call that 50 pips on the button. All right, we'll come back to the signal later. Can you see this signal here, how far we've moved away from the 233? Yes, it is giving us bright because 3 times higher is also bearish, but we're a long way away. So when you can get in early, when we see this kind of compression, and I love it, when you see, I've seen this a few times, it wasn't intentional, but sometimes you will see, the 233 running through gray. That's very good. Likewise, in a buy, you may see the 233 is green running through gray. That's a good sign of a strong signal. So be looking for those. Those definitely are the best to take. Even this morning, if we just go to, let's look at this morning's trade. Now, I was walking my dog. I always, let's just reset that view. Now, remember the 7:30 Express is now the 8:30 Express. That's why, oops, my light flashed there. But I'll say, okay, I'm showing my screen. So right now with daylight saving, look around for 8:30. I walked the dog around about that time, so I missed it. But then from next week with American daylight saving, it will be at 9:30. So this is called, like, some people call these like a time of day. That often around 7:30 in winter, 9:30 in summer, and 8:30 between New Zealand and American daylight saving change, we get a good move, especially a buy. And so we can see this, look here, 8:25, it was 5 minutes early this morning. And look how that signal rocketed up. There was a total of 131 pips in that move if you stay the whole way. But look, again, this was a really great setup. We can see that we are trending. All 6 zones are aligned. So this would be a golden setup. But what makes this one even better? Again, look how close we are to the 233. And even better, let me just blow this up so you can see. We rejected the 233 and we pulled into the 8 times higher zone, and then we got this buy signal and off we went. So remember, looking for these setups, we're looking at examples where we get a bright signal, but it doesn't go anywhere. And I'll show you clearly tonight. I want to teach something else about recognizing that pattern. But again, this morning, keep a lookout, 8:30 for the rest of this week, and then from next week, 9:30. I know the markets are a bit flat until Trump and Xi Jinping get together and talk about the trade deal. Things may be a bit rickety, but I think once they've sorted, that's the big thing, because the 2 biggest economies in the world, China and America, that's what we call fundamental analysis. They do affect the markets. Hopefully they will sort out their trade deals. We will get back to that pattern, because this pattern was very common prior to Trump and tariffs around 7:30, 8:30, 9:30. This buy to look out for. But the point I'm trying to make here is, look at this beautiful setup. We are trending. All 6 zones are wonderfully in unison. So look at that pattern. So again, this is our golden setup. We want to look where we are in relation to the 233. Right, now let's take it a little bit further now, because I've spoken a lot about be wary of late entry. And sometimes things can look like they can line up and go absolutely nowhere. And now and then I see pictures and people post photos or ask me about trades. They got a buy signal, it was bright, but it went nowhere. I want to explain why tonight. So this is a really, really important principle of trading. So we're going to look at an example. Let's have a look at where we're going to look at a sell first. We're going to go to the Dow, and let's go back to the 23rd of October, and we're going to look at 2:25 a.m. Let's go back to the morning. So 2:25, let's go around about 2:30 and see what's happening there. All right, so here we go. We got a nice pattern here. There we got a bright signal. So we haven't got a bright signal down the line, but this is the key principle, is that I used to surf a lot. Surfing was a sport, did it competitively and of course socially for fun. And with surfing, waves generally come in sets. Very seldom do you simply get one wave. And depending on the tides, the storms at sea, you get numbers of waves in set. It's not always 7. Sometimes you only get one big wave out the blue. But waves always come in sets, and you wait, for the sets to come and you choose your wave. So if I was surfing by myself, I may not take the first wave. I may take the second, etc. But you would always choose your waves. Now in trading, there's a very important principle to learn, and that is generally moves come in waves. And the average number of waves in a move is 3. All right, now sometimes I said there may only be 1, sometimes there may be 7. There was a trade I looked at earlier, I counted 7 different waves. And it's important that if you start getting the wave towards the end of the set, that is likely to be trouble. The later you enter a trade. And so if we count the waves in this example, there's wave number 1, pullback, wave number 2, pullback, wave number 3, and finally wave number 4. So this was basically a 4-wave set. And if we look at the pips, so this one opened right up here. That first wave produced 111 pips. The second wave, that produced how many pips? That produced 72 pips. The third wave, that produced 49 pips. And this fourth wave down here, well, not so much in that wave. There was about 25, 29 pips. So if you entered there, if you dragged your stop loss, you may have made almost no pips. Now, it won't always be. This is just a random example I found, but you can see how the first wave was big. It got progressively smaller as we came down to this last sell signal. And so sometimes I'll show you an example. This last signal can actually end up being bright. In this case, it missed being bright by literally 1 bar. We can see that the crossover of the 3 times higher came only 1 bar later. That came so close to being a bright. But if you said, oh, bright signal, I'm going to take this, you may have just broken even. You would have, if you had trailed your stop loss, you would have, there would have been maybe 10, 15 pips. It barely made TP1. So it's very important in trading. Don't just turn on the charts and say, here's a bright sell signal, I'm taking this, and then you end up making a loss. You got to see how far away, how many waves am I away from the source? And this last signal you can see was 4 waves away from the source. Let's look at another example. Let's look at the Dow. This was one in the evening, about 20 past 8. So let's just go a bit later in the day at another sell. So this was around the London Open. And let's look at what is happening here. And that hasn't obeyed me. Sometimes the calendar doesn't work. So 23rd. So let's just look from here. So here's a good example. So here, can you see clearly there's a 3-wave set? And so price was going flat. We get a sell signal. First wave there, clearly pulls back into liquidity. Second signal pulls back. Then we get a third signal. Now, if you just turn on the charts and you weren't looking back, now this is what you would have seen. You would have seen a bright sell signal. And if I just, let me just reset you would have seen, wow, this is a good signal, because you can't see the next candle. It's bright. Look how nicely we're trending. We have just crossed over, producing the signal. We also beautifully 8 times higher, wonderful bearish MACD trend zone. 3 is also red. I'm going to press sell, and look what happened there. That went the other way. But you can see why. I mean, there's a few things we can pick up, but that was this. You wouldn't have known it was the last wave of the set. But basically, the point I'm trying to make is the further you move away from the start of the move, the riskier it becomes. There are things we can also look at. Always good to look at. The clue here would have been the 3-minute, although it was bearish. Can you see it was actually in divergence because it was getting thinner and thinner and thinner. So you can see here the divergence. We can see there's a higher low, there's a lower low, there's a lower low and a higher low. But you can see this was thinning out. So it's something to look at. Keep an eye. We like expansion always. We can see, for example, after this bullish turnover here, trade was turning around to move up. We see wonderful expansion. But here we can see contraction. But again, you can see this. The second wave was bigger than the first. First one went 28 pips. This trade would have opened higher up there. That was a great trade. So that would have opened, let me get that produced 56 pips. This last one would have been a loss right at the end. So again, remember the point I'm making. When you see a signal, look back to see how far down the line you are. And again, look at the MACD to see, this is the clue. Are we still having good momentum? All right, so let's look at a couple of buys. So count the waves. So let's look at Friday, 24 October.
Sorry, Dad, while you're doing that, I was just answering a question in the chat. But did you already talk about, for instance, like how above that sell signal at the bottom, the zones are squeezing together, no longer widening? You may have just said that because we've talked about it.
Yep, which zones? What
like, for instance, right there, the 3 times higher zone,
yeah,
starting to squeeze together as opposed to in the beginning when it's separating.
Yep. there's a gap. And also, I mean, the thing is, this one didn't pull back into liquidity.
Yeah.
So that's sorry, I meant to say that was the biggest risk, that there was no pullback.
In that sense, yeah, the further away you are even from the 233, the more likely price wants to revert to that average.
So we're way away from the thank you, Tyler, way away there. Look at that gap. That gap from that top of that candle was 53 pips. I mean, here we were right. This sell signal, we were like not even 3 pips away. I'll turn off my magnet. This one, we were 18 pips away. And again here, how much? About 53 pips away. So the risk here, although, let's just play this one out a bit. Although we were aligned with 6, there were worrying signs: separation, no pullback into liquidity, and our 3 times higher bearish trend zone getting thin. So that, although it's bright, was a high risk trade. Right, that answer that.
I don't know if I'm jumping ahead or you said it while I was typing, but also just the compression in the beginning and then the expansion versus post expansion, more likely to revert back. Like at the top there, everything is compressed. And I don't know if I'm taking your notes. You just keep going.
Yeah, no, I mean, we can see there was expansion. We can see here with this signal, you talk about the compression, and in the MACD.
At the time of that signal, the 3 times higher is squashing together, which is saying this run's starting to run out of steam in itself. But at the top, you've got intense compression. Everything's close together. And after that compression comes the biggest breakouts. Anyway, you keep going.
That's what we call compression. You've got the 233, 8 times, 3 times higher, almost on the same level. That is the best signal you can get when you have that compression. Second best, there is separation not too far, but we have pullback. We didn't quite touch the 8. We pulled back into 3 times higher. Here, everything's going wrong. We got these zones getting narrower, and we've got a lot of separation between all the zones. So that was still nice and narrow. You can see there, that separation between the 3 and the 8, nice. That's also fairly close. But here, look at this big gap here. I said last week, we can call this TrendForce divergence, a unique convergence. Although price is dropping, this gap getting bigger means momentum is being lost. So, Ty, does that cover that, Ty? Is that what you were saying?
Yeah, I've never seen that before. So you're talking about the black space there.
Yeah.
Yeah.
I said that last week. I call that TrendForce divergence because this is unique to our strategy, is seeing this kind of separation. You can see there was no separation there. And look, from that point on, from that pullback, you can see that means loss of momentum. Price was still dropping, but that gap was getting bigger. And look at this gap here. This gap also is getting wider. So I just call it's a unique to our strategy, TrendForce divergence.
Yeah, it might be harder to see. For instance, the 8 you can see is starting to flatten upwards, and that might be a little harder to see in real time. But the easiest thing to see there is how the red zone, the 3 times higher zone, is starting to get thinner above that sell signal. It went from widening and separating, which is brilliant, to then squeezing together, which says, coming to an end.
Yep. So
really good.
That's the bigger picture to look at. So that's why, although it is bright, that was not a signal that we should have taken. So let's look at a couple of buyers. So let's look at, what am I looking at? Here we go. So let's go to 24 October at 4:30. So remember, try and visualize these pictures, these examples we're looking at. Get them in your subconscious, because these are ones that are going to help you be profitable. So now let's have a look. Here's a good example. Which one I want to look at? Are we in the right place? Friday, 24 October at 4:30. Here we go. I was an hour out. Here we go. It was this one. All right, so let's have a look here. So if we look at these waves here, so if you count the waves in this move, you could go, there were a number of waves. So if you count this first one, you can see from that signal, it is bigger than what it looks. That was almost 50 pips, that move. This would have opened lower down. That was 33 pips. Okay, there was a pullback. But let's count these waves. There was, from the first buy signal, there was 1, 2, 3, 4, 5, 6. Can you see there were 7 waves? So that's unusual to get so many waves. So the key here is these waves, the price was way more spread out. I've just crunched up the screen so we can see. So there were a number of waves, and some of them, obviously, each one pulled back nicely into the 3. We love that. We love signals. Remember that pullback. This, for example, pulled back into the 233 and the 987. Okay, they would have closed lower, but there was still quite a lot of pips there. That was still 37 pips. Would have been some pips in that. But what I want to look at here is at these last few signals. So how many signals were there? 1, 2, 3, 4. Was it 5? There were 5 signals in this move. All right, so we're going to look at that bright one in a minute, but I like this signal. This one was near the middle. So this was, I think, signal number 3 in a 5-bar signal move. But what made this one bounce a lot? Can you see a few things here that made this a very good signal? So there are quite a few things to look at. There's, well, I suppose mainly 3 things. What we like is look at this pullback into 8 times higher. We like that. Although there was a bit of a gap developing, we did pull back 8 times higher, whereas this move here, we only pull back 3 times higher. But also look at this beautiful double bottom in a sense. When you have a double bottom, always draw a trend line. And you can see, I love this. This is just wonderful. We didn't plan this when we designed the indicator, but very often you get a signal on a break of a trend line. And so this thing, how many? 66 pips. So we like that. Pulling in, it's halfway through the move, but it was a good pullback and a double pullback into 8 times higher. We also are a bit far away from the 233, but when you see like this double bottom, this W pattern and a break of a trend line, those tend to move. All right, so this is looking at a 7-pip move, but can you see by the time we get here, can you see this signal? What made this one weak? It's bright. So I want to emphasize tonight that don't press buy on every bright buy signal and don't press sell on every bright sell signal. This is bright because we are trending on all 6 zones, but you can see prior to that signal, there has been a pullback. We didn't pull back into the 3 times higher or the 8 times higher. We're moving quite far away from the 233. And also, this is now the 4th signal in an up move. And so we're quite far away. If you want to take a signal, that's so far away from the source, then it becomes risky. And again, we can also see we have got a gap developing. And also we can see the 3-minute, 3 times higher MACD is the zone is almost going parallel. And also look here, not a lot of separation. There still is a bit of separation on the 8. It did pull back, squeeze there and expand. But those are the things to look at. We like expansion. We don't like MACD going sideways. We like it, we like to see it more with an up. Like over here, there's some expansion. And so when we look at these signals, look at all these zones. Don't just press buy now because it's bright. Now, this is the last one of the set. This one did move a bit. You may have got stopped out if your stop was a bit small. Reasons not to take it. We can see the 21's in the wrong angle, but this one did move a little bit more. That's still at 26 pips. But again, this is the final move of the set. We pulled back. Final wave of this. We did pull back nicely into 3 times higher, but you can see now already we've crossed over and we're bearish on the 3-minute. And so when you start looking at signals that are, 5 waves or even more, the 5th bar signal, then it begins to get risky. All right, so that is the big point I wanted to make tonight is look at the waves. Now, we like compression. I want to talk a little bit about fakeouts now as part of, because compression's good, but sometimes you get fakeouts to lure you into trades. Now, you will see the good news with TrendForce is that if we follow the rules, we shouldn't be lured into fakeouts. So I'm going to show you what a fakeout looks like. There's a principle in trading. Some people call it AMD, and it stands for Accumulation, Manipulation, and Distribution. So you can, if you haven't heard of that, I'm sure it's well known. So AMD, Accumulation, Manipulation, Distribution. So another word for manipulation is fakeouts. Often you get big candles that appear out of nowhere that try and lure traders in. Those are there simply for fakeouts. All right, so let's look at a couple of examples. So let's go to Monday the 27th, and I wanted to look at 23. Let's go to 11:30, 23:30. All right, here is an example of a fake out. All right, so I'm just going to blow it up a little bit bigger here. So we can see there was this lovely move down here. There was a sell signal just after midnight. That dropped nicely, 55 pips, a great move. But you can see what happened. There was a move up, and obviously price rejected the 233, came back down, and then we went into a period of range. Can you see here? Price is just moving absolutely sideways. And so if we just put on the drawing tool, and I'm not so good at this drawing tool,
Oh, Dad, I'll tell you what. Do what I do. Do a rectangle across the highs and the lows, so you can see it like a box. And even if you just turn off the indicator for it, I'm just talking through what I do. Either, just a rectangle box, and then you don't have it on your. Not that's a parallel channel. Just like a box.
Where's my box?
Go to the drawing tool button down. The brush, there'll be one in there, I'm pretty sure. Yes, rectangle under shapes, top one under shapes.
Thank you. I'm going to add that to favorites. Here we go.
There you go. So I just put that across the highs and the lows and drag it around.
So we can see here from that high there. Okay, that looks good. So that, I don't know if that's the best color. So I'll make it white so we can see. There we go. Can you see this? We had a move up, move came down, then price went sideways. And you can see how price tried to break out here. So if you had the indicator off, remember if you were looking sideways, price, if you were looking and you couldn't see the net, this is how you'd be looking at a chart. Remember, that's how we look. You would have seen price moved up, price moved down. You would think price is now going sideways. Look, it's made this double bottom here. It's rejected this level. And look at that candle. I'm going to press buy and I'm in. Now, that's how a lot of people would read the chart without an indicator, without a good indicator, because that looks like price has broken that high. We've come out of range and moving up. Right, but obviously that what we call a fake out. So what we got here is accumulation. So when you're in range, this is called accumulation. And after accumulation, we always end up, well, not always, but most times before we end back on trend where price wants to go, we get a fake out or manipulation. So this is to lure traders in to pressing buy. And I'm sure if a lot of traders who are inexperienced would have seen this pattern and thought, yeah, we've broken that high, boom, we're pressing buy, I'm in. But look what happened. Price went completely the other way. If we turn the indicator on now, we can see what happened. So we did get a counter trend signal there. But of course, we know we're on the wrong side here. The 233 is going to be strong resistance for any trade. And we can see price has been moving down. And so we would have waited there for a sell signal, and price almost one candle later, price really broke out of the range. That's called distribution. So watch out for fake outs. They often come with counter trend signals. That's why counter trend signals can be risky. Let's just look at another example. So I need to add this box to my favorites. I don't know why it's not there. So let me go rectangle. I'm adding that to my favorites. There we go. Thank you, Ty.
Absolute pleasure. Exact same. The same thing happened on gold last night between 6:30 and 8 o'clock. Go and draw a rectangle around that range, because once you broke out.
Let's go there quick. Let's look at that example. So let's go to gold. And what time was it?
6:30 last night, all the way till 8.
Okay, so we're going.
You have to go back.
Back to
there, that area. See there under the 987? So you can see that whole zone right there. We're above the 233, but then it was compressing. About 6:30 to about 8 o'clock. Yeah, that's an hour and 40 minutes pretty much from memory of just sideways and just patience. And then there was a break. You can probably draw a trend line in there too at some point. But once we broke out of that extended compression, the longer we were in that zone, the bigger the clues you should be thinking of. The longer the spring gets compressed, the greater the breakout should be.
Yeah.
And then that thing dropped like crazy.
Gee, that was big.
Like crazy. So yeah, watch out for that. Like range sucks. It's annoying when you're in it, but at the same time, you can rest assured that after a lot of range comes the reward if you're patient.
Yep. Let's look at another example. I'll just delete this. Let me just clear the chart. There was one more.
Marcus is saying in the chat 450 this afternoon on the NAS as well, unless you've got one already.
Let's go to 450 on the NAS. So it's good to look at these patterns. So 450 this morning, where we're looking at on the NAS, 450 this morning. Where are we?
Sorry, PM, 450 PM, 451.
Yep. So there was a lot of range over here. That would have been so if we took the box from that high there, that's like a fake out there. You can see breaking above. That would have been a harder one to pick up because the market actually was a bit trending up at that point. But you can see anyway the range, and then breaking that level, price dropped. I want to look at another example. I had a good example. Let me just delete that quickly. On the Dow, let me just see what time that was.
Marcus is being, I love the transparency. He said it got me. So that manipulation, that initial spike out, that if we get lured into here's one thing I want you guys to remember. There's nothing more bullish than a failed bearish move.
Yeah,
Vice
say that again.
versa,
That is so good,
there's
Si.
nothing more bearish than a failed bullish move. So when something goes the wrong way, like if you have a bias, this is one thing over the years, I can flick around my bias pretty damn quickly. Because if I see something fake out and go the wrong direction, that then solidifies to me more than anything that it's more likely the other direction. So you might lose on the first one. I honestly, like, I take plenty of losses, guys, and I usually take 1 or 2 before the big win. Sometimes 3 if I'm trying to get in too early to something. That means, because I have a very tight stop. Like last night, my stop, it's about 50 points on gold. So it was, the risk to reward on that was huge. The risk was 250 US and it ran for like 350 pips. So I turned 250 into like 1400. So I can take a few knocks. I can get knocked out a few times, 3-4 times, and it'll still end up in the right direction overall. But yeah, that line, there's nothing more bearish than a failed bullish move. There's nothing more bullish than a failed bearish move. Just remember that, and just be okay with observing that manipulation. And if you get knocked out, just be okay with reassessing, taking a look. Don't try to revenge trade instantly and go, oh, I'm in the other way. Like, wait for some confirmation. That's the one thing you also got to know. But Dad, back to you.
Yeah, this just another example I saw. I mean, if you just scroll back, I was looking at the NAS too. There's so many examples, but again, you can see here, move up, price comes down, and look how it goes sideways. So if we drew a box from that high there, and I can move the box around a bit. If you were looking at this trade, you would think, okay, price dropped, it's going sideways. You're looking at the candles, and there we've got a counter trend signal. We've made a new low. I'm jumping in. But can you see what happened? That was an example of a fake out. We got accumulation, manipulation, which is the fake out, and then we get the signal. It wasn't a massive trade, 25, 27 pips, still some pips there. But again, keep a lookout for when you can draw a square box. We could have drawn this a bit higher up there to that candle. But when you see price confined and then suddenly it breaks a level, that's often what we call manipulation or a fake out. I saw lots of them. I just scrolled back on the NAS. Let me just delete that quickly. There's still something else I want to cover. I just went to the NAS, I think, today. Let's go to the NAS. Let's just go to the Dow this morning. It wasn't too clear in the Dow with that big move up. There was just a little bit this morning. So let's just go to that morning move up. It was a little bit not as clear, but you can still see, if we just looked at this good buy signal over here, we can see if we drew a range box from, let's see, before that buy signal, just this little area over here, we can see there was a buy signal, price pullback. And you can see that after price pullback, candles didn't really close lower than this level here. And so again, look at this. This is a fake out. So accumulation, then you get manipulation, and then finally, price rejects that level. But you can see why with TrendForce, there's no ways anyone should have taken that counter trend signal, because you're trading straight into liquidity, straight into the 233. I mean, the take profit would have been down here, no ways. So the idea is have a look back for practice and see if you can find where price goes sideways, and then look for the fake outs. I mean, if you scroll back, you'll see plenty of examples. I think, did we look at this example here? I think we looked at this one. That was the one we looked at earlier, possibly, where price goes sideways, fake out, and then we go with trend. So keep an eye out for those. All right, there's one more pattern, if there are no questions, I want to look at before we close tonight. And that is, where I wanted to look at, where we go, is just the flow that often happens. In fact, let's go back to gold. I saw a great example there. What time we were looking at? I don't want to go spin the wheel again. Where did we look at earlier?
The one we were just looking at?
Yeah,
it was 6 to 8 o'clock last night, Monday night.
Monday night. So I'm going back to Monday night.
To 8.
Okay, yeah. Look, I just saw this one. So what often happens is you never know when price is going to reverse. So there was a counter trend signal. It turned out to be correct. There was a reverse of the move. If you look, price moved down nicely and then price moved up. And this was the accumulation we looked at. You wouldn't have known if that signal was going to be the signal that was signifying a reversal. I mean, it could have bounced off and gone up. Who knows? But this is a pattern that you need to look at with TrendForce. So I don't take many counter trend signals. But very often, this is spaced more apart than what I would like, but very often you get a counter trend signal, then you get a pullback, then you get your real signal. And so we can see counter trend comes first, and then we get a pullback, and then we get a sell signal, and the same for a buy. So often what I wait for, when I see a counter trend signal, I don't press sell. I'm not sure if that's going to be the reversal of the move, that it is going to move down. So I wait counter trend signal, then I wait, and then I wait for the sell signal. You wait counter trend, the pullback, then you take the signal. And there are a few other examples. If I look at I want to show you a few before we close. I've mainly been looking at the Dow, so let's go back to the Dow. So that's the patience of trading. Don't take the first signal. And I want to go back to Wednesday, 22nd, 8 p.m. So let's go Wednesday, 22nd. Now this clock doesn't always work, but let's go to 8 p.m. So that'll be 20. Let's see if it takes us there first time. So we can see this was a bit of a long drawn out one. Okay, maybe not a good example, but we can see, price moves up. You get the counter trend, price pulls back. We just missed getting a sell signal there. We should have got one, but we didn't quite close below 3 times high, pretty close. But then finally, we do get a sell signal at the end. But very often, the point I'm trying to make is you get the counter trends come first. Then eventually, when you trend, you get the sell signal. This wasn't how many pips, not a massive trade, but if you were patient, there was still, 30 pips. That's all you need to get rich. Maybe a better example on Friday, the 25th at 8 in the morning. Let's look at that one, Friday the 25th, and let's go to 8 in the morning. There we go. Let's look at that pattern, what came there. We can see here, this pattern. So we had a big move up. All right, so price came right down, moved up a lot of pips. We had, some buy signals. We looked at some of those. Then we start getting counter trend signals. You never know, again, if this counter trend signal was going to be the one that was going to reverse the trend. I mean, obviously the 8 minutes beginning to tell us something. The 3-minute trend zone 2 on the MACD is telling us something. But I often just wait for the signals, for the right signals. So counter trend, that pullback, another counter trend that went further. Then we get the sell signal. I mean, this one would have opened just below there. And we can see if we were patient, that produced, 55 pips. So look for that progression. Let's look at one more.
Right there, Dad, before that sell signal, that spike up into that red zone and that rejection of it like that into the sell signal, the angle of the 21, that was
a good,
those are the beauty ones to me.
Yeah.
When you're underneath the zones and then it comes back in for one more grab. Yep. And that 8 times higher MACD is widening and separating the whole way.
Yep. That's a great picture there.
That's a goodie. Aside, obviously getting to the right side of the 233.
Yeah.
Yeah.
That's why, remember the 233, it often does bounce around a bit. But with this pattern, look at the MACD. That was always going to move down. So you would have had to hold your nerve. You wouldn't have got stopped out. But again, this was almost, 60 pips on that trade, 57 pips. But again, the point I'm making is the counter trends, you never know which one's going to be the big one. And so often I wait. I sit through the counter trends, wait for the pullbacks, then I wait for the signal. Let's just see if there was one. I think that was maybe it. Was this the 25th? My timing's a bit messed up here. Let's just see if I did get one there at 19:30. I don't know if that's an example. We're going to close now. I don't think this was the one, but let's have a look anyway. What it shows us. No, it definitely wasn't that one. It's not gone there. Anyway, I think I've made the point. I think I've covered just about everything. Just one more thing again. Remember, we haven't gone a lot over let's just go quickly to this morning again. This is not completely linked, but with the 15-minute candle breakout. Let me just extend this left quickly. I'm just going to plop a line here. I'll just change the color so it looks more like the original color. So if we go back to this morning, we can see here, this was the breakout. So even if you missed that buy signal, this is late in the morning. We can see from this explosion here was breaking above the resistance line, the top of the 15-minute candle. That still moved up, there was 65 pips in that move. But remember, it often does retest. I wanted to remind us tonight. Sometimes it breaks and flies through, but we can see here, and this is a good example, we can see that it didn't break through first time. 1, 2, 3, 4, 5, 6, 7, 8. It took about 8 minutes, about 7 minutes. It tested this level, then it broke through, then there's often a retest. And so a lot of people I know, when I've been studying this, some people wait for the retest before they enter. If you do take the first break, you do need a good stop loss. So if you took this candle, you would have need to put your stop loss basically inside, I would say safely inside the trend zone. So you would have needed 20 pip stop, but you would have got your 40 pips on that candle. So remember, if you jump in straight away, you need a good stop loss. If you wait for the retest, you could have had a smaller stop loss. You could have put, here, if you jumped in after that bullish candle, you could have had half the stop loss and got similar pips. So just remember that. Don't jump in straight away. If you do, you're welcome to bigger stop loss. But if you wait for the retest, then you need a smaller stop loss. So I just wanted to throw that in, because that's what happened this morning on this candle. So Ty, I think that is it for me. We're almost out of time. I'll hand back to you for any closing thoughts.
No, that's good. Thank you, Dad. Do you want to, unshare, or maybe we'll answer one or two questions? There we go. I got us both pinned here, I'm pretty sure. Really good question from Kylie and Aaron earlier on. When we were talking about the waves, I'm just looking for it in the chat, so I'm just outside. There we go. So when we're talking about those waves, and as it starts to move, you saw 1, 2, 3, 4 potential waves or more.
Yep.
Sorry, I saw the wrong question box. There we go. The question was, would you stay in for all of the waves or take chunks out of each wave? And this is where it comes into different styles and plays.
That is personal.
But I know we're going to have different answers. So I'd love to hear yours and what works for you. And then I'll say what works for me. And then we'll figure out what works for everyone else.
No, I mean, I tend to take one move at a time. I mean, those pullbacks were like, you would have been in some of those moves, you would have been up, the 50 pips, you would have pulled back to 20, or 15. Then you would have gone up to 70 and pulled back. So now you like to sit them out, but it depends. I have set them out before, but then I definitely I wouldn't just be looking at a 1 minute screen. I'll be looking at the 3 minute and the 8 minute. That's when I would stay in. So definitely to stay in those moves, you need to be looking at a higher time frame. But I know I tend to take the money with every move. And Ty, you can say what you do.
Yeah, this is where it's going to come down to personal preference. If you can see enough on higher time frame analysis that you might have gotten at a really sweet zone at the beginning of the waves, then I love to hold longer than I probably should most of the time. That does painfully mean a lot of sometimes break evens if I move to break even too early, things like that. So if I can, I'll open multiple positions, or so that I can close one early and bank something. Or if I've only opened one, you can close part of one and then move that stop or leave it where it is, and you risk it. You've left a smaller amount on the table, but you've already banked some profit. So I wrote the answer in the chat there that I love being able to close something, and then I know I've got some profits for the day. And then if I've left something on the table, whatever I'm now trading with is basically house money for the day. So I've got some profits, and then if there's another wave, another opportunity to re-enter, or I think that it's a great wave, it all depends on how much momentum is happening when that thing drops or when that thing rockets. I don't know what, like me and Jordash were having some questions earlier with each other. I think he leans more towards like buys and has had some great runs with that in the last little while. And I have this natural bent towards sells. I think, Dad, I don't know if you have like one or the other. I think you're buys.
Buys, yeah. I'm a better buyer than a seller.
I don't know what it is about sells. For me, I just see those things more. I don't know why. But anyway, you'll figure out what your norm is and what you're most prone to leaning towards. But this is where zooming out, turning off everything, looking at some high time frame analysis, that'll then help you with a bit more of a potential bias for where things can go, and whether or not you want to leave something in there or close something straight away. The sooner you bank some profits, the better, to be quite honest. You're going to have less. I mean, Tom Hogarth has got interesting perspectives on it, because essentially subconsciously, we're all actually avoiding pain with whatever direction we take with this. It's I'm closing early because I have fear of loss or giving it all back, or I'm letting it run for fear of leaving pips on the table, etc. Like there's so many different ways you can play this, and we've each got an internal subconscious drive of some little bit of fear that we're trying to somehow mitigate in our actions that we take. And so if, like, I know Tom Hogarth hates like exiting a trade early with a take profit. He doesn't set targets. And he would rather let that thing run, look for a double bottom or a double top to then be his exit, but like at the sign of a reversal, as opposed to there's a really good level to target. I'm going to put a target there and I'm going to take those pips and I'm done. And personally, I actually love it. When I do that, when I set a target like Dad does more often, target hit, shut the lid, move on. But some people hate that. They hate the idea of then looking at their screen and going, oh my gosh, that thing dropped. Like when I closed my trade last night, my wife was next to me and said, whoa, look at that. And it showed where I exited. And she's like, but it's still going. And I'm like, yeah, well, we did great, honey. And it's always going to potentially keep going, but it's always going to potentially reverse. And you just don't know. And you've got to play it through with your mind of which one feels worse for me? Leaving pips on the table and letting it run without me and I closed a great trade, or it comes all the way back up to your entry, or worse, your stop loss if you haven't moved it, and you end up with scratch. You got to decide which one suits you better and play to those. And the targets are there and you can take them. So that's obviously the easier way initially, is just when you're in a trade, drag that TP to a healthy-ish level, and then you could potentially, trail it with your stop, or you could close half of it when it reaches a certain level. Like you can close half of it at TP1 or 2, move that, move the stop loss to break even, or move it to TP1. Once it gets to TP2, I mean, this is all trade management that we're talking about now. But with those waves, what Dad really said, which is the biggest key, is look for the proximity to something like the 233 and those zones, and where you're entering in relation to that 233. Because the further away you get from those zones, the more likely. If you think about those averages and think about price. Think about a rubber band being attached to the 233, and every time price extends above or extends below, think of it being a drawing pin on the 233, and you're pulling that rubber band away from it. Eventually, it wants to revert back to the mean. No matter which way you go, it wants to come back to the 233 eventually. And so the further away from it, the higher the chance that thing is going to go back to it sooner. So hope that helps, guys. I'll catch up and see if there's any other questions in there.
There's one good question I want to answer from Aaron and Kylie. When it's ranging for a long time, do you just sit and wait for it to change? What's your strategy for this? I tell you, I've got one clear strategy, and I always say this is one of the secret sources of the indicator. For example, if I'm in the 1 minute and it's ranging, you often can't tell which is going to be the breakout. And I gave some examples tonight. What I always look for, this is my secret, is I look at the 3-minute histogram. And when that turns either bright green or bright red, that is a huge sign that it's broken that accumulation and that you're now moving into distribution or a proper breakout. And so that's real key. So if it's ranging, that's when, I take a lot of 3-minute signals, and I especially take them when it's been in range, because the 1 is not always clear, but the 3 is got a much clearer signal, obviously much stronger, being slightly higher. So look to the histogram going bright green or bright red.
In the system PDF, we even have a whole little page on that section. It's in the video. The histogram is on page 38, and I'm pretty sure there is a section after that about it changing color. And so, that's massive, Dad. I love that. Very, very cool. I'm just checking if there's any other questions in there. Yeah, Mark actually even said it. Isn't the histogram color helping with that? Very, very good.
Absolutely.
Love it. Well, we are on 9 o'clock. So, guys, I hope you got some value there. I'm sure you did. Go back. If you have to rewatch this or relook at it, Dad, there was even a pattern that you pulled up during that Zoom. You went back to a date. I think it was the end of October. And I pulled it up because I recognized that it was exactly the same as the night we were recording the video and the screenshots in that PDF back in the 18th of September. Virtually the most identical pattern. It sold off, it came down, it then broke back up. There was a bright counter trend signal, and then came a buy signal after that. It was literally almost the exact same. I did a double take and I went and found it. Sorry?
Patterns repeat themselves.
Yeah, they do. And so I recognized that pattern. As soon as you saw that, I went, I've seen that before. and so you just got to get to that place where you've seen it before, you know what's coming, you know what happens next. So, rightio, guys. That'll be us.
Talk about the live analysis, Ty?
Yes, you can announce. I'm sure everyone's going to love this one.
Well, just an idea. There's an interest rate now. I'm putting myself really out there now, but there's an interest rate announcement at 7 o'clock on Thursday morning. It looks like there's going to be a cut. If it is, there's going to be a huge move up. And so at 7 o'clock, we thought maybe you can put in the feed on our main feed. We could, instead of doing a live analysis on Friday, do it on Thursday, maybe start at 6. And I can just do some training on how to trade the news. And if it does obviously meet the rules for trading the news, then we can maybe try and trade that move. That could be quite big. But we never know. If the market is ranging and it's news, it can be risky. But maybe put on the feed. We can put on a main feed too, because not everyone's on tonight. But if you want to move it to Thursday, we trade the news. I see Jordash is saying yes.
Yeah,
then we'll move it. See you there. Okay. We'll do it.
There's news it's FOMC, right? So it's at 7, and there's usually another news event at 7:30 as well.
Yeah.
So I'll have to sign off someone there to get eggs and bacon going and get my boy to tennis, but there'll definitely be pips on the board. That's for sure.
Okay, so we'll move live analysis to 6 on Thursday. We'll position ourselves at again. I'm very strict with news. It's got to satisfy my criteria. Otherwise, I'm not going to, but I'll just talk us through it, get us in position. And if it works out, then hopefully there'll be some pips on the news. So that'll be Thursday then instead of Friday.
Cool. All right, guys. Well, if you didn't catch in the beginning, we've got a plan. Next week we're diving into volume in greater detail, the POC, the point of control. The following week we're getting into counter trend signals, and we might throw it out to you if you're keen for one more live event before the end of the year. Dad and I are throwing around dates. I see fist pumps from Kylie, so we're thinking to try to do a potentially more of a longer practical kind of a day. The only way we can pull it off is a Saturday. And I know we're getting close to Christmas, but we've done it before. So we thought potentially Saturday, the 13th of December. Let us know if that's good for you. I know it's almost impossible to please everyone with these dates in general, let alone December. But we thought if we don't do one then, well, then we're getting into like February, right? So if you're excited, let us know. Otherwise, we're keen to bring everyone together. Do we can? Wayne, I'm getting thumbs. Awesome. Okay. Well, we'll aim for that at the moment. We'll definitely confirm things close to the time. Cool. There'll be more of these available if you guys are keen as well. In the meantime, guys, trade safe. We'll see you in the chat, and we'll catch you on the charts. All right. Good night, everyone.